Okay, so like today we're gonna like really dig deep into this specific fixed indexed annuity. It's called the North American Guaranteed Allocation 10.
All right.
And we got all this material, the marketing stuff from Diversified Insurance Brokers.
Yep.
And so kind of thinking like maybe we can really see if this thing like lives up to all the hype.
Yeah, that sounds good to me.
And our listeners, they're pretty savvy. They probably already know what an annuity is, right?
Right.
So we're going to go a little deeper.
Yeah, for sure.
Talk about like, pros and cons and like those little details.
Definitely the devil's in the details, as they say.
Exactly.
So let's not get bogged down like just explaining what a fixed index annuity is. Everyone knows that.
Right. Yeah.
Let's talk about like why someone would pick this specific one.
Yeah, like what's the point of this particular one?
Where like what problem is this annuity trying to solve?
Yeah, that's a good way to put it.
Yeah.
I've always been a little bit like nervous about the stock market.
Mm-hmm.
Like, yeah, big gains sound great, but I don't want to lose all my retirement savings.
For sure. That's a big fear for a lot of people.
Yeah, like keeps me up at night.
Yeah. And I think that's where this guaranteed allocation 10 thing comes in.
Okay.
It's trying to like find that balance, right? Between, maybe making some money and like knowing that your money is safe.
Okay, so you're not going to like lose everything.
Right, exactly.
So it guarantees you'll get at least something back.
Yeah, like there's this guaranteed minimum interest rate. So even if the market tanks,
you're not going to be totally screwed.
Exactly, you're not starting from zero.
Okay, I see. So that makes sense. But like, how does it actually connect to the stock market?
Right.
Like, I'm assuming it's not just like following the S&P 500,
No, it's not that straightforward.
Okay.
The guaranteed allocation 10, it uses these things called index crediting strategies.
Okay.
And that determines like how much money you make.
So it's like connected to the market, but not directly.
Right. It's kind of like dipping your toes in the water without like jumping all the way in.
I like that, yeah.
And they have a few different options,
Okay.
So there's the S&P 500, but there's also some that are like less risky, like the S&P MRC 5% ER.
Uh-huh. So you can pick how much risk you're comfortable with.
Exactly. It lets you customize it a bit.
That's cool. I like that.
Yeah.
Something I've always wondered about these annuities, though, is like,
Yeah.
what about getting your money out?
The liquidity.
Yeah, exactly. Are you like stuck for 10 years with this thing?
Well, so there is a 10-year guarantee period.
Okay.
But this one's a little more flexible than some of the other ones.
Okay.
So you can actually take out like 10% of your money each year.
Okay.
Without getting penalized.
10%. Huh. That doesn't seem like a lot, though, if you like need a bunch of money.
Yeah, you're right. It's not going to cover like a huge emergency or anything.
Right.
But it does give you some wiggle room, Like
Yeah.
if you have an unexpected expense or if you want to like buy something nice.
Treat yourself.
Yeah, exactly. And there are some exceptions to that 10% limit too.
Okay.
Like let's say you need to move into a nursing home or
okay.
yeah, or if you get really sick,
Right.
then you can access more of your money without having to pay those like surrender charges.
Okay, so they have like some built-in stuff for like if things go wrong.
Exactly. They're trying to be realistic, life happens.
Yeah, that's good. That's reassuring.
Yeah.
Okay, but what about those surrender charges then?
How
How bad are they?
That's a good question, and it's something you definitely want to be aware of.
Okay.
So basically, if you take out more than that 10% during the surrender period,
Right.
you're probably going to get hit with a penalty.
Okay.
And then there's this other thing called a market value adjustment,
What's that?
or an MVA, they call it.
Okay.
It basically means that, like, if interest rates have gone up since you bought the annuity,
Uh-huh.
they might give you less money back when you withdraw it.
Oh, because like the market has changed?
Right, exactly. They're adjusting it to, like, match the current market conditions.
Huh. Okay, so it's kind of like a gamble.
In a way.
Like you got to balance the flexibility with like how much money you could make.
Exactly. It's not a perfect solution for everyone.
Right. Definitely not one size fits all.
No. And that's why you got to think about your own situation
Yeah.
and what you're trying to achieve with your money.
Okay, so big picture.
Exactly. And speaking of big picture, let's talk about what happens when you get to the end of that 10-year guarantee period.
Oh, yeah, like what happens after 10 years?
Right. So you could just take all your money out if you want.
Okay.
But you could also renew the annuity for another term.
Oh, okay, so you can keep it going.
Yeah. And they'll probably give you a different interest rate based on like what the market's doing at that time.
Okay, that makes sense.
And you can also like convert it into an income stream, like a pension kind of.
Oh, that's cool.
Yeah, and if you don't do anything, they usually just automatically renew it.
So they just assume you want to keep going.
Right, exactly, unless you tell them otherwise.
Okay, well, it's good to have options.
Yeah, for sure.
Something else I thought was interesting in this material was the death benefit.
Oh, yeah, that's a big one.
It seems like a pretty good deal, especially for like estate planning and stuff.
Yeah, absolutely. It's like a safety net for your loved ones.
So like, what does it do exactly?
So basically, if something happens to you, your beneficiaries get all the money that's accumulated in your account.
Okay.
And the best part is they don't have to pay those surrender charges.
Oh, wow. So it's like a way to avoid those penalties.
Exactly. And it makes it a lot easier to pass on your wealth, you know?
Yeah, like less hassle for your family.
Right, exactly. It can be really helpful for planning your legacy.
That's great. Okay, so last but not least, let's talk about the company behind all this.
Sure.
North American Company for Life and Health Insurance.
Yeah, they seem to have a pretty solid reputation in the industry.
Yeah, I was reading, they've been around for a while.
Yeah, they're not a fly-by-night operation.
And they're like financially stable.
Which is super important when you're talking about annuities.
Right, like you're trusting them with your money for a long time.
Exactly. You want to make sure they're going to be around to pay you back.
Yeah, peace of mind is priceless.
For sure.
Okay, so I guess like to wrap things up, this North American Guaranteed Allocation 10, it seems like it's kind of a unique product.
Yeah, that's an interesting mix.
Like you could potentially grow your money, but you also know that you're not going to lose everything.
Right. It's about finding that balance between risk and reward.
Exactly. It's not for everyone,
Yeah.
but it's worth looking into if you're the kind of person who likes to play it safe.
Yeah, if you value stability and you want to dip your toes into the market without going all in.
It could be a good fit.
Exactly.
Awesome.
Yeah.
Well, hey, I really appreciate you breaking all this down for us.
No problem. Happy to help.
And for our listeners out there, as you're thinking about this annuity,
Yeah.
I think the big question is like,
Yeah.
how much risk are you comfortable with?
Right.
Because this thing, it might not make you a millionaire.
Sure.
But it could help you grow your money steadily over time.
And with some peace of mind.
Exactly.
Yeah.
So it's all about like, what are your goals and what are you comfortable with?
Exactly. That's
Okay.
the real question you got to ask yourself.
Great. Well, hey, thanks again for joining us.
My pleasure.
And for everyone listening, we'll catch you next time on The Deep Dive.
See